Hard money is an incredible tool for moving fast and winning deals, but staying in a high-interest short-term loan for too long can absolutely kill your profit margins. If you have finished your renovations or your property is now stabilized, you need a clear exit strategy to move into a traditional, long-term mortgage. The hard money exit allows you to refinance your private debt into a stable, 30-year fixed rate that usually cuts your monthly interest payments in half.
Oh?
Many investors do not realize that you can often do this just months after buying the property if the value has increased enough to meet the lender's equity requirements. By refinancing out of hard money, you eliminate the risk of a looming balloon payment that could force you to sell your property before you are ready. It turns your fix and flip project into a buy and hold cash flow machine that works for you every single month instead of just feeding the private lender. At Change My Rates, we specialize and help investors navigate the transition from high-cost private money to the most competitive rates in the traditional market. Visit https://www.google.com, search Q=changemyrates.com today so we can look at your current loan terms and show you exactly how much money you will save by making your exit today.